Welcome to Tesla Daily. Here's the latest on Tesla and Xiaomi. First up, the Xiaomi SU7 has officially outsold the Tesla Model 3 in China, marking the end of a 5-year reign for Tesla. Meanwhile, Tesla has launched its Cybertruck in the UAE, but it's facing challenges back home, with demand dropping in the US. In other news, Tesla's rolling out a new AI 4.5 computer in the Model Y, which could bring some exciting upgrades. However, the company is also dealing with a talent exodus, as several executives have left recently. And keep an eye out for Tesla's upcoming Q4 earnings report. There are some key metrics we'll want to watch. Lastly, Tesla is offering an insurance subsidy in China, a strategic move as sales start to decline. Stay tuned for more updates. All right, let's dive into some big news from the electric vehicle world. First up, Xiaomi's SU7 has officially outsold Tesla's Model 3 in China, ending a 5-year reign. In 2025, Xiaomi delivered over 258,000 units, while the Model 3 managed just over 200,000. This shift really shows how fast the Chinese EV market is evolving. Local brands are stepping up and giving established names like Tesla a run for their money. Xiaomi's success highlights a growing preference for more affordable, tech-savvy cars. And it's a wake-up call for Tesla. Their sales in China dropped by nearly 5% last year, and the Model Y isn't faring much better. This raises some eyebrows about Tesla's hold on a market where they've been a leader for so long. To counter this, Tesla's rolling out subsidies and financing options, but that feels more like a defensive move than a strategy for growth. Analysts are now wondering if Tesla can keep its edge as local brands like Xiaomi, Li Auto, and XPeng continue to innovate. The recent dip in Tesla's sales and new insurance subsidies suggests they're struggling to keep pace with the rapid changes in the Chinese market. Next, let's talk about Tesla's Cybertruck. They've just launched deliveries in the UAE, hoping to boost sales as US numbers drop. In 2025, US Cybertruck sales fell by a staggering 48%. The UAE, with its high disposable income and love for luxury vehicles, could be a golden opportunity for Tesla. But here's the kicker. In the US, they sold only about 20,000 units, far below the 500,000 Musk initially projected. The price difference between the US and UAE is also a concern, with the Cybertruck starting at around $110,000 in the UAE. Plus, design issues in Europe are limiting its market potential there. This international push might not be enough to offset the US decline, which raises questions about the Cybertruck's future. How the UAE market responds will be crucial for Tesla's strategy moving forward. Now, onto some tech news. Tesla is introducing a new AI 4.5 computer in the Model Y. This upgrade could enhance their self-driving capabilities, which are key to their long-term vision of a robotaxi fleet. The AI 4.5 might feature a 3 SoC architecture, gearing up for more complex tasks ahead of the anticipated AI 5 chip. However, the timing of this rollout has some folks questioning Tesla's earlier claims about existing hardware being sufficient for autonomy. With the AI 5 chip delayed until mid-2027, AI 4.5 acts as a bridge to keep new vehicles relevant. Investors and consumers will be watching closely, as this could shape the future of Tesla's self-driving ambitions. Next, there's some unsettling news for Tesla: a talent exodus. Key executive Benjamin Bate has left, and he's not the only one. This trend of experienced talent leaving raises concerns about Tesla's stability and growth, especially as they shift focus to autonomy and robotics. The departure of seasoned professionals could impact manufacturing efficiency and innovation. Many employees feel their expertise in traditional automotive manufacturing is being overlooked, which might be fueling this exodus. Investors are likely worried about how this talent drain could affect Tesla's ability to deliver on its ambitious plans. Now, let's look ahead to Tesla's Q4 earnings report, set to be released on January 28. Analysts expect to see declining revenue and profits. They're projecting around $25.1 billion in revenue, down slightly from last year, with earnings per share at 44 cents. This dip is largely due to a 15% drop in vehicle deliveries and shrinking profit margins from increased competition. Investors will be keen to hear updates on Tesla's robotaxi strategy, the energy division's performance, and changes to autopilot features. The shift to a subscription model for full self-driving could open new revenue streams, but it all hinges on consumer adoption and regulatory approvals. Finally, Tesla has rolled out a new insurance subsidy for Model 3 buyers in China, aiming to boost demand amid declining sales. This subsidy, of about $1,150, is part of a broader strategy to compete in a market where local manufacturers are gaining ground. With overall deliveries in China down nearly 5%, this move is crucial.
Tesla has already cut prices and introduced financing options to make their cars more appealing. But the recent drop in sales, combined with new taxes and the end of trade-in subsidies, makes their position even more challenging. How well Tesla adapts to these changes will be key in maintaining their edge in China, the world's largest EV market. A lot happening in the EV world, and it's going to be interesting to see how these developments unfold. That's a wrap for today's Tesla Daily Insights. Thanks for tuning in. Just a quick reminder, this is for informational purposes only, not financial advice. Catch you in the next update.